Tom, start with you. I mean, we've been talking a lot about the markets overall in the wake of this Fed decision, but tech in particular, even just take over the last 3 months, has undergone a lot of punishment. As I look at the list of stocks that are down, let's see, by at least a quarter since then, Apple, Netflix, Baidu, Nvidia among them. What's going on specifically from a tech perspective, you think?
Sure. So within tech, I think the same issues that are pulling down shares in general are affecting tech shares, and that's concerns about rising interest rates and then the prolonged trade war between the US and China and whether or not tariffs are going to ease or not ease. And then individually, some of the companies you mentioned, I think investors are trying to figure out on Amazon, how should they think about greater profitability but slowing sales? And then for Apple, how should they think about softer unit sales for their iPhone? So I think you have a combination of issues weighing on the sector in general and those weighing on the individual companies within tech.
And Henry, you look at a chart of the Nasdaq over the past 10 years, looks like a ramp, pretty much.
Straight up.
Just a few divots here and there, but pretty much a ramp. I mean, you've been saying for a long time that something more than this, arguably, was coming. So does it matter what the details are, whether it's trade concerns, whether it's interest rate concerns, exactly what's bringing things down? Was it just due?
No, I think Tom nailed it. I mean, I think the sector as a whole, these stocks are a little bit more expensive at the peak than the market, and so they're coming down more as the market multiple compresses. And then you do have specific company issues at every company. When Amazon's transitioning from a revenue story to an earnings story, that's a big deal. Facebook's obviously going through a huge storm right now. Apple, things are changing. The good news is the stocks are just nothing like the multiples they were trading at in the 1990s, for example. So, and they have tremendous cash flow. Apple, I think, is now at 14 times earnings. Okay, things don't have to go terrifically to justify that as long as they maintain it. So I don't think it's a similar situation, but these are higher beta.
Henry, what do you think of the markets more broadly right now, especially when, I guess it was probably the beginning of the year, you came on this show and you said we're due for a big swoon?
Yes, my guess is we are in a bear market, probably the beginning of a relatively long bear market that could take us down the average bear market amount or more, and I'm basing that primarily on valuation. Stocks were very expensive on cyclically adjusted earnings and pretty much every cyclically adjusted measure you look at. And when you look at the headwinds, interest rates, the loss of the tax cut stimulus, huge deficit opening up, there are just lots of things that are coming together that I think make this more likely to be a bear market. But that said, I don't know. We will see. I've been wrong before.
Tom, you're still bullish on a number of stocks, including Amazon and Apple. How do you put into context the fact that they're investing so much? When you look at the new locations that Amazon's opening up in Northern Virginia and in Long Island City, you look at Apple, they just had an announcement. Google is as well. Facebook says they're going to continue to invest in people to try to address some of these data issues. I mean, does that perhaps signal going through an investment cycle where investors should be concerned about exactly how they're going to perform profit-wise in terms of consistency, or no?
So the good news is that they're investing for growth, and I'd say the bad news is that they've had to look to other geographies in the U.S. to find reasonable cost on labor. And you see it both with Apple, where they added Austin, Texas, and then indicated they'd add thousands of jobs to other locations in the U.S. and hundreds of jobs into another tier. And then Amazon deciding that the search for HQ2 ended up being search for HQ2 and HQ 2.1. So I think the important news is they're still growing, they're investing for growth, but I see the need for them to broaden their geography in the U.S. as it's becoming more difficult for them to find talent. And while I think there's greater uncertainty heading into 2019 as some of these issues with the higher interest rates and the concerns about trade are going to persist, I think there's reason to be optimistic when you look at Apple buying back shares and the strong cloud computing effort from Amazon. So I think all is not lost.
In terms of those talks between the U.S. and China on trade, given this DOJ press conference just a short while ago, actually naming specific hackers with ties to the Chinese government, does this, I'd imagine this gives the U.S. more leverage, but how does this play out in terms of these talks more
Possibly. I mean, from my perspective, things are escalating quickly. I remember in the beginning, everyone thought President Trump would just sort of wave a stick and then he'd get a little bit of something that he could say, hey, see, great new deal, and we'd move on from there. But we've stuck with the tariffs for a long time, the Huawei CFO situation, things seem to be escalating, and they really will begin to bite the economy if it continues much longer.